Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade. It is Thursday, May 1st. Happy May Day to everyone out there. And it has been a strong start to the month for the equity markets, and really a strong end of the month for stocks as well. Looking at the indices, the S&P specifically, down less than 1% for the month of April. Very impressive considering how we started out those first couple of weeks, but a strong end. And so far, a strong start to the month on impressive earnings from Meta and Microsoft last night. Now, the S&P back to the 50-day moving average today, which we last touched when we broke below it 2 days after marking the all-time high on February 19th. So a little bit of a technical barrier potentially here, or an inflection point, if the market is able to chew through and continue this momentum to the upside. 200-day moving average would be the next upside target. With that said, positive trade headlines have been flowing. That's been the trend of headlines here over the last couple of weeks, which has helped spur this rally. But we may be back to a price point in the markets where traders really want to see a little bit more substance rather than just headlines. So that's going to be something to keep a very close eye on. Now, moving over to the commodity front, we have got gold breaking lower this morning, back below the 20-day moving average and testing that big 3,200 level mark, which was resistance on April 2nd and 3rd. A failure here, and we could see additional profit taking, take the market back towards trend line support in the 50-day moving average, which really comes in about $100 lower near 30.95. Now, for our take on black gold, aka crude oil, I'll kick it over to our head of research, Dan White, to tell us what's been going on in that market as prices have been retreating very rapidly through this week's trade.
Hey, traders and Oliver. I'm here to talk a little bit about crude oil. This is Dan White. I'm head of research at Blue Line Futures. So this week, crude is sold off sharply. We closed last Friday at 63.02, and we made lows this morning around 56.39. Price bouncing back a little bit here today. But just to kind of run through with you guys and update you on crude oil, the story behind this most recent sell-off this week is almost entirely tied to OPEC production plans. So the group meets next Monday, May 5th. And this week, JP Morgan and Reuters issued reports speculating that the group could hike production more than expected once again. So if you recall, at the last meeting, the group surprised markets by increasing production by 411,000 barrels per day for May. That was previously planned to be somewhere around 120,000 barrels per day. So they almost tripled the amount previously planned. And that was the core catalyst that really brought futures down from that 70, 72 level to the lows of 55. The story behind that surprise production hike was tied to non-conforming members, meaning members of OPEC that were producing above their quota. The main problem children of OPEC have been Kazakhstan and Iraq, and Saudi Arabia, OPEC, to enforce, these members to produce at their quota. Oftentimes they will ramp production, bring down price to sort of punish these members into compliance. So the speculation this week came after Kazakhstan said they will not or cannot lower their production really enough to appease Saudis and OPEC. So Kazakhstan's response has really led to the speculation that OPEC could surprise markets again with a ramped up production plan. So if that were to happen, risk is definitely, I would say, skewed to the downside. But the one thing I would say to traders out there is that, fake news or some bad reporting leading into and around OPEC meetings is almost an epidemic. So we're trying to tell customers to prepare for outsized volatility heading into this report and around the report, and just keep sizing, very prudent risk management tight. That's kind of where we're at on crude oil. I'll let you take it from here, Ali.
All right, good stuff, Dan. Now, all eyes will be on OPEC, and that will be on Monday. Now, to wrap things up, we'll take a look at the ag markets, which have been very choppy this week, both grain markets and livestock. Earlier in the week, we saw July corn futures break below a cluster of the major moving averages, that being the 20, 50, and 100, which led to some technical damage. Now, the market tried to get back out above there in today's trade, but that old support pocket now acting as firm resistance. And the continued failure here keeps the door open for a potential retest at the lower end of the risk range from March, which comes in closer to 450. Now, like grain futures, livestock markets very choppy this week. We've seen some interesting price action in live cattle specifically over the last two sessions. And despite a high cash trade and a strong rally in the stock market, those front month June live cattle futures really can't seem to find their footing. And when a market struggles to move higher on very bullish news, caution flags start to go up. So keeping a close eye on that into the weekend. A reminder, if you haven't signed up for a free trial of our daily commodity commentary or research portal, which is updated throughout each day, head over to bluelinefutures.com. And if you have any questions over the market or an account at Blue Line Futures, please reach out, 312-278-0500. We've got a great team here that is ready and willing to help. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.